Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to create this short video for all of you guys out there. US dollar index has pulled back by around a point or so off its highs. As you guys can see, 81.5, we pulled back a point, which is around 100 pips. And essentially what we're having right now is that the US dollar index is having a nice little pullback. It is the way markets work. I anticipate immediate support to be around the 20-day moving average, and again, this is just typical market behavior. Overnight, we did see some Italy bond yields start to pull back a little bit, which is very good on a macro scale. Essentially, it means that there is a bit of confidence coming back into the Italian bond market, albeit not that much. We're still trading at around 7.119 yields, and essentially a 7.19% yield isn't really that good. So 119, but still, it isn't very good. We're still hovering at around 7%, and again, a lot of people still want to be, diversifying outside of that European bond market, perhaps buying into safer securities overseas. And that's what a lot of cheap equity strategists are doing out in Europe right now. So it does make a lot of sense, and quite frankly, if I were in their position, I would do the same thing as well. Now, moving on, let's talk about the Dow Jones Industrial Average. And the Dow Jones Industrial Average is having a nice little rally. We're kind of breaking out of this area right towards the top. Again, I'm a little cautious. I don't like to throw caution to the wind right now, mainly because we're getting close to our previous highs. We only need around 350 more points to get back to around 12,800. The risk to reward isn't really there anymore at this point, and chances are once we hit that 12,800 area, we could pull back on the SPY, which is an index ETF, and chances are I would short the market at the 12,800, give it a day or two session before it recedes back. But again, I am remaining market neutral. I just want to collect some time decay, see where this markets go, and then I want to make a bias once I have a very good entry set up. But for right now, I'm only exposed to market from the point of view of decay, so time decay. The longer I stay into that position, the more money I make, and the yields are above the market average rate. So again, I accomplished that by shorting both the FAS, FAZ with the 50-50 allocation strategy. But the main point I'm trying to bring out is that the amount of upside you have in this market sits at around 350 points, give or take. That's around 3 to 3.5%. The most you could get out of owning an index ETF or trying to ride the markets a little higher would be around 3 to 3.5%. If you're trading any Dow component stock, that's probably the maximum, upside you could perhaps see, and that really depends on the type of stocks you're buying into. Again, I have half my assets allocated into a non-cyclical, low risk, low beta investment portfolio, and the other half is allocated for, again, short-term trading. So the way I see this market is a 3% upside. Again, chances are we could break above that, but the likelihood still remains slim to none. I don't think markets have enough enthusiasm to push above that. Risk appetite doesn't really seem to be there quite yet. We could see maybe perhaps Q2 earnings season as a potential area for us to break above that. But again, that all depends on what happens out of Europe. If there's a major event coming out of Europe in the year of 2012, a lot of bullishness, a lot of risk appetite will be taken off the table as people sell out of their assets and continue to buy up the non-cyclicals, the treasury yields, the treasury bonds, the treasury notes, and basically all assets that are seen as low or no risk. So that's the whole entire mentality going into these markets in 2012. Moving on, let's go ahead and analyze the silver market. Silver market is able to finally break above this trend line, but again, I've been wrong before and I can be wrong again. But again, this could be the potential for us to finally see an uptrend in the silver market for once, which is very good for you silver bulls out there, because I know you guys have been looking for a buy opportunity, and this may just be it. And again, people ask me, are you perpetually bearish on any asset class? And quite frankly, no, I'm not. However, when I invest or when I trade, I want to look for a realistic entry point and a realistic exit point. When we were at 48, 49, on the silver market, I was very bearish and I didn't want you guys to participate in the market no longer. But now we're at the bottom end of the range, and perhaps we can go into an upwards trend. Upward trends are very positive. You can hold an asset for maybe 3 or 4 months, maybe even 6 months to a year. collect some decent yield before you sell again. But the main point I'm trying to bring out is we could be entering into a market reversal, and if we are, my price target sitting on silver for right now, and that could change in the near future, is somewhere around $34 to $36 between this area. The main reason why I'm choosing 34 to 36 is because it's the main resistance area in the past, and then of course it sits right between the 200-day moving average currently. And that's pretty much where I want to exit out of my silver long position. And the main way I would expose myself is through a leveraged Direxion or AGQ. I'm not exactly sure whether it's ProShares or Direxion, but basically a leveraged silver ETF, because again, markets are very volatile in silver. I wouldn't want to have the leverage I'd get from either a futures or a forex trading account, primarily because the fact it does get very hard to hold on to an asset before you become insolvent. So, you know, typically I am right over the longer term, but to be right over the longer term, you have to remain solvent, and sometimes you don't get that whether you trade futures, forex, or options on the silver chart. So again, my approach to this market is to be a leveraged ETF. Okay, now moving on, let's go ahead and analyze the final chart, which is going to be gold. Gold has gone up quite a bit in the past couple days, but again, we haven't had a major break above the trend line. I would wait to make a re-entry above the gold market when we finally break above this major trend line right here, which would be the upper areas of a channel. Again, most people often ask me, well, why shouldn't we just buy randomly? And the main reason why you don't want to do that is because you don't want to expose yourself too early to a trend or too late to an opportunity. And certainly right now, if we were to break above this to the upside, we would have a new, I guess, longer-term uptrend. And again, this is the main point of analyzing a multi-year channel, because a breakage above that would imply, gold could go above 1900 and perhaps into the 2000 areas. So let's give this market some time. We want to watch whether or not it can break above that. Typically in technical analysis, you would want to short into the upper channel, and chances are I'm going to do that. And the main reason why I would want to do that is because I could ride it for 2-3 days, earn some yield, and perhaps if the markets are able to break above that later on, I'd still earn my yield, I'd close my position, and I'd try to await an entry after we break above the top end of this trend line. But this isn't the issue with silver right now. Silver seems to be breaking above this trend line just fine. We have a multi-year channel in play, and I believe it is finally able to break above that multi-year channel. Now, let me just get rid of a couple of trend lines so you can get the point, because the bull flag pattern did play out. I did mention that we had a bull flag pattern in the silver market, but I really want to point out the narrowness of this multi-year channel. And again, we have it right here and right here. Again, it's a narrowing trend line. I forgot the exact terminology for it, but the main point is you're kind of squeezing out from a really, really tight area, and once you squeeze out of it, it means there's a lot of upside ahead. So again, I am pretty bullish the silver market. I have some confidence to back it. As far as the stock market is concerned, though, there's very limited upside going into the stock market at this point, going into this earnings season. Once earnings are over, chances are the markets will have a pretty significant pullback, and once markets pull back a little bit off of risk, I guess risk reallocation, but really after everybody dumps the pump, stocks are going to have a pretty nice pullback. And again, I'm looking forward to that, so I can short some stocks, short some higher beta assets, and earn additional yield through that means as well. So again, I hope that helps you guys today. If you have any questions, leave a comment right below, and I'll be more than happy to help you guys out. Alright, see you later.